We're sitting here today as Europe is deciding maybe it needs to spend more on defence, for instance. Mm-hmm. What happens if you had an equity market with no defence stocks in it? So I'm the regulator. You two guys are running big pension funds. I come to you and say, I want you to buy more British shares. We've got a defence problem here. And you go out and buy the index. Now, there are a few defence companies there. Or I come to see you and say, I want you to sell the index and I want you to invest in these two defence stocks. That's already beginning to happen. That's what's happening. The government is coming along and saying, the government's effectively declaring a market failure, saying, you guys didn't build all this capacity that we need to be independent from China and defend ourselves from Russia. So I want you out of the index and I want you into this stuff over here. And we have a thing here called the British Growth Fund, which is effectively trying to do that, which is a fund in which the pension and life funds are being asked to contribute to British investment in assets. The government will play a role in selecting those assets. We've got the Alberta Sovereign Wealth Fund, which has just fired the board because it's forcing it to invest more money in Alberta. We have the Futures Fund of Australia, which is the Civil Servants Fund, and they've also changed the mandate, so it invests more money in Australia. We have at the minute Italy actually talking about all sorts of funds that could be created to invest more money in Europe, obviously particularly European defence. But I think the speech that really tips this off is this incredible speech that Macron made on the 26th of April last year, which was grossly underreported here, maybe not even reported at all. But the speech is called Europe, It Can Die. And in that speech, he says, every year Europeans send 300 billion euros to invest in America, and this is absurd. Now, he doesn't say he's going to stop it. He doesn't say how he's going to stop it. But it's pretty clear that he wants to stop it. And then last week we had Enrico Letta, who is a member of the Italian Parliament, but importantly runs the Institute to Jacques Delors, saying we've got to stop investing money in America. We need to invest that money here. So if I was looking hard enough, I could give you another 10, 15 examples. So this is no longer a theoretical position. This is happening in real time, in real life, and governments are playing a role. And this is cross-border capital flows. It affects exchange rates, it affects interest rates, it affects the valuation of equities. And the governments are back in the asset allocation business. They call it industrial policy. It sounds lovely. Oh, more jobs, more industry. How is it financed? It's financed using your money. So it's a kind of recognition that the index fund may have worked for the customer, but probably hasn't delivered the form and nature of investment that we need as a society. And I write a lot about this thing called financial repression, which really looks at the period post-World War II, 45 to 79. And the governments, particularly of mainland Europe and Britain, were deeply involved in telling you where you should invest because it was an issue of national survival. Now, there are governments today that believe that this investment has to be done as a matter of national survival, and that's not just defence equipment. It's building stuff that's made in China, maybe now building stuff that's made in America, green energy. We don't have a Europe devastated by warfare, but we have a Europe that is grossly underinvested in lots of key things because China did it, or America did it.
Yeah,
and now there's a realisation that we better get investing.
And what do you think that looks like in reality? How would that affect pensions, ISA savings, these kind of...
So what's happening is that I think it's 23 billion the British government has gone into its British Growth Fund, and it's got that really from pension fund and life funds. Just went round with a hat and said, we need the money. Obviously, the interesting thing is those guys had to sell something to get that. So you can have a look. I mean, this is all online. You can see who's in that fund, and if you've got a pension fund for one of those guys, you're probably going to find yourself in the British Growth Fund. Now, it may be 2% of your assets. It's maybe not such a bad thing. But other things being discussed, or the SIPs, or maybe even ISAs, the argument is being put forward that you get a tax break for this. How can you get a tax break and not invest in the United Kingdom? So maybe the tax break you get on putting money in a pension fund only comes if a certain percentage is invested in the United Kingdom. So those are the mechanisms through which a government can influence where your money is invested.
So, I mean, like the Brit ISA obviously was like a version of this. But then the other problem you have is retirement savings, pension crisis. It's not just a problem of, we need defence. It's a problem of we need people to be able to live in retirement.
Sure.
And what you're doing is maybe negating returns for this other need.
Well, I'm of an age that I can remember the 1970s. In the 1970s, the poorest people in society were the pensioners. Mm-hmm. you probably think today the richest people in society are the
Well,
pensioners.
they are.
They are. The boomers and the rich.
So you-
Boomers,
So-
but I don't think the millennials might not be when they get there.
Yeah.
That's
So,
a-
but what we've got to remember is that someone's got to pay for this. And do you mention Thomas Piketty on this? Is this allowed? The famous communist French
you can talk about
economist. In inequality of wealth, one of the ways you bring down inequality of wealth is giving put returns to pensioners. Now, maybe not guys who are going to be pensioners in 30 years, but the existing pensioners. Someone's got to pay for it. It's got to be done. And after World War II, we did that through providing very poor returns to savers. And that's where we are, and that's the reality. So we, in my opinion, as savers are now fighting this war to try and retain the value of savings at a time when the government has to get money from somewhere. To me, it's clearly it's coming from savers.
That was a clip from our full-length conversation with Russell Napier, who's a financial history expert. If you want to watch the full interview, you can check it out right here.